Ladies and gentlemen, welcome to the Palantir earnings call. This should be a lot of fun. We're going over Palantir, over HIMS, Grab, Navitas, Realty Income Group, Energy Fuels. It'll be a lot of stuff. But we'll be listening into the Palantir earnings call. We will be going through all of that to make sure if, maybe this company isn't at a high valuation. Maybe it's perfectly valued and their future growth is just so exponential that, investors need to pay much more than they would traditionally for a growth stock. But we're in a new era. Anyway, let's go ahead and jump into, famous last words, by the way, we're in a new era. Let's go ahead and jump into the stock chart here. Okay, so Palantir, HIMS, Grab, Navitas, Royalty Income Group, Energy Fuels, Vertex, Diamondback Energy, Clorox, Exact Science, Voyager Technologies, Ring Central. These are the names that are reporting. By the way, real quick, Chime Group allowed people to get just such an easy dip buy today. Ended up dropping all the way down to $16.17 today for no reason. If you were able to do that, the swing on this stock was quite crazy. Okay, so from yesterday at close, which was about 1720, we ended up seeing about 6% down on the day, and then 6% ended up leading to about a 10% swing. So from -6 having to go to, +4, that was a plus 10% swing on the day. I didn't get the absolute bottom. I got around 1650, but I absolutely bought shares of Chime today, and quite a lot, to be honest. Okay. No HIMS call. We will be we will be following along with HIMS. And that's the reason why it's a separate stream, is that I want to cover all of these companies, not just Palantir. This is not a Palantir exclusive stream, but I will be following Palantir, especially the earnings call, listening in there, doing all that jazz. So yeah. Okay. Let's go ahead and get ready for earnings, as that's coming out in the next couple minutes. And if you guys haven't seen before, we'll be rattling off every single, what we're expecting for earnings, what we see, and then all the details, everything that's changed, all the major highlights, partnerships, everything that's announced on earnings. Speaking of earnings, currently, Palantir has beat EPS quite a lot over the last many quarters. Have only missed 4 quarters in the last few years. That was in 2022. A very hard year for many companies. And aside from that, on EPS, it's been constant beats. And then on revenue, not only have they been beats, but they've been accelerating a size of beats. So last quarter was actually one of their largest beats, actually passing that $1 billion in revenue. And that's exactly what they're expecting for this quarter as well. $1.1 billion in revenue and 15 cents of EPS. Okay. So this will be quite exciting to see. HIMS, we are expecting about $581 million in revenue, which is not even their highest revenue quarter. We saw that in Q1, $586 million. So $5 million less than that. Definitely possible to beat that, and 10 cents of EPS. Expectations are, relatively high across the board here, but honestly, I think that they might be able to clutch it out. Lastly, for the expectations before earnings, we also have Grab, $876 million in revenue expected, US dollars, and 2 cents of EPS. Okay. Huge jump up in Grab earnings is expected, with roughly flat on EPS. So Grab currently going into the day, $0.66 a share on Grab, $24 billion market cap. HIMS, $10 billion market cap. Smaller company, but honestly, extremely popular. BM&R cooked. Yeah, I saw it pretty low today. It was like unbelievable there. About to close out the day at 42.83. I mean, if you're interested in the ETH DATs, I mean, that might be the buy for a while, like a long time. Someone said BMNR next stop 0. How? That would be my question. Just how? But yeah. HIMS has a 14% expected move before or after earnings. Or sorry, on to the positive or negative side. Yeah, no, that's crazy. HIMS has always been extremely volatile, though. I mean, this thing is more volatile than BMNR. Look at this chart over the year to date. From $23 to 73, back to 23, and then up to 67, back to 40, back up to 70, back down to 40, back up to 65, back down to 44. This is an insane chart. That's mind-blowing. Okay? So we're going to see their earnings as well. I have legitimately a few shares of HIMS. Someone else bought them for me. And so I think I have 4 shares of HIMS, but it's not a company I actually care to hold. I'm just not a big, healthcare guy, to be honest. I like technology. I'm honestly shocked and surprised by my own portfolio that I don't have Palantir. I did have Palantir, but then I was trying to be sort of a student of valuation to some degree and didn't want or didn't quite see the vision the way that others did. And so I ended up selling off Palantir. It's essentially only gone upward on its growth rate, not the revenue, right? Finding a company that grows is one thing. Finding a company that constantly grows their percentage of revenue, that's a complete other thing, okay? That is extremely, extremely hard to find. And Palantir, if you were lucky enough to be one of those folks to buy in, the single digit marks or anything like this, you've essentially found yourself a 20 plus X position. But take a look at this. Here, let's swap this over to here. And then... And by the way, earnings we will take a look at in 1 minute. That's when earnings actually gets released. But let's go ahead and take a look. Is it this? No, where is it? Oh, I hate this freaking platform. Come on. Okay, here we go. And then, boom. Okay. So just before that minute to earnings, I wanted to show you guys, look how crazy this chart is on Palantir. This is the orange line is their revenue growth rate over time. So as this was sinking 52% down to 13%, the bears were all over this company. Okay. Then the acceleration back to 20%. That was great. And then we started to get stupid with it. 27, 30, 36, 39, 48. That only gets harder to accelerate because you're going on the back of harder and harder earnings to follow. Okay. So this quarter will also be very hard to hold up because, well, Q3 last year was not easy, right? That was a really good quarter, $725 million. So this growth rate is going to be hard to continuously beat each and every quarter because then the quarter after that was another hard one to follow and then another one. And then obviously Q2 of 2025, by the time we get to Q2 of 2026, that's going to be some severe numbers to put up. Okay, so we'll see what Palantir can do. I hope that they clutch it out for the sake of retail investors. It's obviously a widely followed name. And also look how they've done this too. Look at the scale between government and commercial growth. There was a big concern in where Cathie Wood ended up tearing apart this name. Oh, wait, markets are closed. Markets are closed. Sorry. Got to go back. Palantir already climbing higher in the after hours. Grabs up 0.16. Palantir up 0.25. HIMS up 0.25. Energy Fuels up 1%. Okay, let's go hunting for some numbers. These immediate green candles, I don't know if they're just spelling excitement right now or if we have any numbers. Let me go see. So, Palantir, we're expecting the numbers at 405. Okay, we're expecting the numbers at 405. Same with HIMS. Grab should be out right now, by the way. Grab should be coming out at 4 o'clock. So we will see. Let's go. Let's go. Set them up. Also, there's a pretty funny clip of me last time playing one of these earnings. I'm not going to be doing that this time. Unless, of course, Palantir ends up dropping by 10% and yet they end up putting up stellar numbers. I mean, I might consider that. But currently, HIMS is flat. Palantir up. Oh, starting to rocket higher here. 0.6. 208.15. 208.50. I do not have any numbers yet. Poly Market suggests an 86% odds of beating on EPS. Okay? 86% odds. That honestly might have been the best way to play earnings. I almost give their chance of beating EPS even a higher chance than that. I'd be, it'd be funny if I was wrong, but just look historically. Tanner, can you check on Voyager Technologies? Yes, it's on the list. Voyager Technologies is flat right here. It's definitely on the list. We will get those numbers. Okay. Okay, let's see. Grab up 0.4%. HIMS down ever so slightly. Essentially, everything's flat right now. Palantir just seeing the slightest... well, not slight. I mean, it's 0.5% bump. It's real, but no numbers just yet coming through. Okay, we're starting to get them. Here we go. Vertex Pharmaceuticals. Where is Vertex? Flat on the day. They ended up seeing a double beat, but by barely anything. EPS beat by 5%. $4.58 was expected. They saw $4.80. Revenue, flat. Okay? Or a beat by 1%, but essentially flat this whole time. Stock now reacting down nearly 2%. Okay, starting to recover there. Back to Palantir really quick. 208.60 was now the new target that was just hit. No other numbers so far. Only Vertex Pharmaceutical. Exact Science also down 1.75%. This is a Kathy Wood special. Vertex down 1%. So far, Navitas up 2.6%. Now going flat. Now going red. Uh-oh. Uh-oh. Down 3. Down 4. Down 5%. $11.66. Uh-oh. Look at this. Pushing lower and lower. Wow. Down. Oh my gosh. Down 7%. This must be terrible. Let's get these numbers. I don't have anything just yet. Bloomberg is usually faster. Oh, okay, I have them. EPS in line, negative 5 cents, which was expected, and revenue was in line as well. 10 million is what we got. EPS is up 17% year over year. Revenue is down 53% year over year and down 30% quarter over quarter. It's not what you want to see, ladies and gentlemen. But, oh my gosh. Oh my. Palantir, $222 a share. Oh my God. That puts them at a $500 billion market cap immediately. This is a $500 billion company. HIMS Down 6, down 7%. These are huge swings on earnings, touching $41 a share on HIMS. Palantir up 4%, $215 now. Oh my gosh, I want to see these numbers. I have another company, but I want to focus on these ones real quick, just while we're on it. Palantir starting to give up some of those gains, not quite pushing through 220. Maybe starting to recover. HIMS down 5%, $42. Navitas down nearly 11%. Exact Sciences, so what a swing, down to $65 a share, recovering back to 71. Oh my gosh, now down 13% on Navitas. Palantir up 3.3%, HIMS down 5%, Grab flat. Wow, wow, wow. Reality Income, pretty flat on the day also. We just got their numbers in line on EPS, 35 cents. They expected 35 cents, and revenue beat by 2%. Slight beat on the top line. Okay, HIMS. I got the HIMS numbers. It's not great. EPS, they expected 10 cents. They got 6. Missed by 40%. Revenue beat by 3%. They expected 580 million. They got nearly 600 million, 599. EPS was down 81% year over year. Revenue up 49% year over year. Stock is down 5% on this news. Palantir up 2.9% on the day. Boy, oh boy. Okay. As the time goes on, we're not just going to be talking, oh my gosh, I got Palantir numbers. This is such a crazy business. Expected $1.1 billion in revenue. They got 1.2 essentially, beat by 8%. Revenue was up 63% year over year. 63%. 63. You remember the chart that I was showing you guys getting higher and higher and higher? 60 freaking 3. EPS was up 110%, beating by 24%. They expected 17 cents. They got 21 cents. EPS was up 18% quarter over quarter, and revenue was up 18% quarter over quarter. EPS was up 31%. Sorry, I stuttered over my words the whole time. Jeez, this is a monster business. Absolute monster of a business. Let's get these numbers going here. I want to bring up the Palantir IR page really quick so we can get a read through on this report. Currently not out. It's not out just yet. We don't have the press release. We don't have the presentation. HIMS reversing quickly. This could be an announcement that they've made, maybe suggesting that there's a reason why we're seeing some sort of change in the stock price really quick. Okay, Palantir, just getting some initial thoughts here. Adjusted EBITDA was $600 million. The estimate was $500 million, and they raised their full year revenue guidance. Jeez. I mean, you have to, right? You have to raise your full year guidance if you beat. Oh, wow. HIMS turning quite green, $45.99. Congratulations to the Bulls. There must be something in that report that they're reading through, not just the top and bottom line. Clearly, the algos ended up selling off the name, but maybe there's something more to it that now they're starting to read through the press release. So this is probably not algo driven. This is probably actual traders coming in to pick up the slack because the numbers and the reasoning behind those numbers was not as bad as originally the algos thought. Palantir up 4%. I could definitely see this going higher. We haven't even seen the earnings call. We haven't seen Alex Karp get excited. I mean, my bet would be on this continues to climb just back into 220 plus. Navitas down 7.5%. Let's take a look at some of the other names here. Diamondback Energy down 3%. Vertex Pharmaceutical down 1%. Energy Fuels down 3.2%. Okay. That's the initial reaction. Hill Crime? Is that how I say that? Hill Crime. Thank you for becoming a member, my friend. Appreciate the support. HIMS is great. Yeah, what a freaking turnaround that was. Someone saying Fubo. I don't know. That was in the morning, but yeah, no movement in the after hours. Stock ended up down 8.5% on the day. Palantir up 3%. Okay, let's see if we can get those Palantir numbers once the press release is out. I'm not saying it's out, sorry. I'm just saying whenever it is released. Okay, sorry, I have the initial... It is out. I'm just out here lying to you guys. Oh my gosh. This is disgusting. Okay. 114%. That's our rule of 40. Okay, wait. My camera's a little bit in the way, so I think I have to read it from this screen over here. The results make undeniable the transformational impact, sorry, my camera's in the way, of using AIP to compound AI leverage year-over-year growth in the U.S. business surged 77%, and year-over growth in U.S. commercial climbed 121%. Palantir ended up falling nearly, going back to flat on the day, up 1%. HIMS up 5%. Sorry. And we yet again announced the highest sequential quarterly revenue growth guide in our company's history, representing 61% year-over-year growth. Is their guide? Oh my gosh. U.S. revenue grew 77% and 20% quarter-over-quarter. U.S. commercial revenue up 121%. U.S. government up 52% year-over-year. This is dumb. This is so crazy. Closed 204 deals of at least $1 million, 91 of those deals at least $5 million, and 53 deals of at least $10 million. Closed a record-setting $2.76 billion of total contract value, up 151%. Closed a record-setting $1.31 billion of U.S. commercial TCV, up 342% year-over-year. This is dumb. That's crazy. Oh my gosh. Customer count up 45% year-over-year, 7% quarter-over-quarter. Here, wait. Let's see if we can get both of these up here. Hold on. Hold on. 1 second. We can do this. Boom. Okay. GAAP income from operations of $393 million, representing a 33% margin. Adjusted income from operations, $600 million, representing a 51% margin. Rule of 40 was 114%. That's disgusting. Only really NVIDIA last quarter is beating that. Cash and cash equivalents, short-term U.S. Treasury securities of $6.4 billion. Wow. Wow, wow, wow. Adjusted free cash flow margin, 46%. Full year guidance. We raised our guidance to essentially $4.4 billion. We're raising our U.S. commercial guidance to in excess of $1.4 billion, representing a growth rate of at least 104%. We raised... Man, this is gross. Oh my. HIMS turning around. Let's see if we can get some HIMS numbers here. Let's see if Fiscal has them. Fiscal does not have them, so we'll go searching. Okay, I'll just switch back to this for now. Okay, I'm going to their IR page, see if we can get some quarterly numbers from HIMS. And we do have a press release out. We'll go through the press release. For HIMS, up 4%. Revenue of at least nearly $600 million, up 49% year over year. Net income of nearly $16 million and adjusted EBITDA of $78 million. Subscribers grew to almost 2.5 million, up 21% year over year. Maybe we can go through the presentation as well, because I know that they put a lot of work into their presentation. Be a little bit more rewarding to go through that than HIMS turning negative again. This stock is crazy. Okay. This stock chart is going to share this bottom part of the screen with me. And let's go. Okay. Let's see. So 49% revenue growth, loss on net income. Well, not a loss. They grew, but they didn't grow year over year. Subscribers, 21% year over year from 2 million to 2.5. Monthly online revenue per active subscriber, $80 now, up 19% year over year. Oh, wow. I remember that was hanging around the $60 mark for a long time. Okay. Let's see here. Looking ahead. Actually, wait. I should probably start at the beginning. HIMS and HERS is one of the few, if not the only, healthcare platforms where each customer experience drives the continuous improvement of the platform. Scaling our platform allows us to create opportunities for better experiences, stronger customer relations, and greater efficiency, which is why we're excited about the progress we've made in unlocking access to new standards of healthcare for millions of customers. Our third quarter. Oh, wait, sorry. Hold on 1 second. Can you guys hear this?
So let's bring in Brent Thill, Jefferies equity analyst. He has a sell rating, a $60 price target.
This is on
Brent,
Palantir.
Want to get your thoughts on this report and what it's going to take for you to perhaps change your tune on Palantir.
Yeah, the fundamentals are rock solid. The valuation is like anything we've ever seen, trading at 90 times revenue. So there's no way you can put any valuation metric on the actual valuation. Again, we've never seen anything like this. The fundamentals, we certainly haven't seen anything like it as well. So to split the two, we've said repeatedly, the fundamentals remain exceptional. The question is this the best place to put your capital based on all the other trends that are going on? You can buy Amazon at 15 times EBITDA. You can buy Palantir at 90 times revenue. So we've been arguing that we feel there's a better use of capital in other places. We've been wrong for part of this call on Palantir, but I think we've been right in those other names, just given the valuation concern, and they continue to execute at an incredible high level. So there's nothing to really take away. The government business decelerated a little bit, 52% versus 53% last quarter. If you want to nitpick, obviously the government shut down. What's that going to do to the business? But ultimately, the commercial business is crushing it. They're putting up great numbers. And as Dr. Karp has said repeatedly, we haven't seen numbers like this from a software company. We've covered software for 30 years. There's nothing like this to compare it against.
So if we have nothing like it to compare it against, how do you get to a $60 price target?
25 times revenue, which would be one of the highest multiples in software right now. If you look across the entire industry, the highest multiple in our industry, whether it's Cloudflare, CrowdStrike, these are phenomenal companies that are producing huge returns that trade at those multiples. And so you have to assume that this execution continues consistently for years for that multiple to come down. We've never seen a 90 multiple. And look at the numbers. Why is the stock flat? Because it's flat because the multiple's so high and there's no real room on the multiple expansion to go.
Brent,
so again, I go back to way better other stories in AI to invest in that I have more conviction in.
if I were an investor sitting at home, though, I think I would wonder, is Brent Thill just stuck? I mean, you had the $60 price target. It's over 200. Like, you could double your price target and still have a strong sell on the thing. So how does this work? Like, do you have to stay at 60 just because, you know, in for a penny, in for a pound?
No, I think we look at multiples. We've been doing this for a long time, John. This isn't our first rodeo. So when we saw Snowflake implode, Datadog implode, we weren't on the Snowflake trade. We had a hold, and everyone's like, why don't you have a buy? And ultimately, there's a point where these crack. Palantir has done a phenomenal job. But when you look at so many other names in AI across our tech franchise that we cover, many of these names were up 50 to 100%. So would we like 150, 160% return that Palantir's had year to date? Great. We have a safety net around other names that are up 50 to 100+%. And so again, it's a relative bet. And I think when you look across institutional money managers, they're made the same bet. A lot of our clients have made the wrong bet, not betting with Palantir. And ultimately it comes down to valuation. The retail investor can bet because they don't really know the valuation. They don't know it trades. You can literally take a 60-point multiple between the second highest ranked name, which is Cloudflare or CrowdStrike, and the gap between that and Palantir is like 60. So that it's a number that we don't feel comfortable with.
Okay.
And we feel comfortable again with others. I'm not taking anything away from the fundamentals. Fundamentals are great.
Okay. That was a little bit of Wall Street commentary on Palantir's earnings right now. I think it's fair, you know, like there's paying for growth, and then even the fastest moving businesses in the world can be overvalued. Okay. Is Palantir there? I don't know. I'm not taking a bet on it right now. But I know that others are, and they've made a fortune doing so. So right now, I'm not really one to speak. I have not been in the right. You know, I've been wrong. Okay. Going back to HIMS really quick, up 2.6%. Let's just chalk up some of these more numbers. So actually, subscribers, we said it was at 2.5 million. It was actually a miss. Wall Street was expecting about 5% more subscribers than what they actually ended up putting up. Okay. Online revenue was up 50% year over year. Wholesale revenue up 10% year over year. Guidance came in at around 615 to 620 million. They were expecting, Wall Street was expecting 630 million. So that was actually just the slightest miss on guidance for revenue, okay, for Q4. Then if we go ahead and look at free cash flow was flat year over year. Cash from operations up 74% year over year. And cash still very strong. Okay. Andrew Dunham, though, said this for HIMS. That's the CEO. We're building a platform that gets more personal, more proactive, and resonates with more people as we scale. We're launching new specialties, partnering with healthcare leaders, and making significant progress in establishing HIMS and Hers as a global brand. The CFO, however, said, we delivered another quarter of strong, profitable growth. Revenue grew 49% and adjusted EBITDA grew 53% year over year. We're confident in our ability to exceed the ambitious 2030 targets established earlier this year. And we're in active discussions with Novo Nordisk to offer Wegovy injections in future oral versions via HIMS and Hers platform, pending an agreement. There you go. Okay. Palantir up 0.5%. Okay. Then Navitas down 13%. Grab up 1%. I don't have any Grab numbers. They haven't come through. They're also an international business, so the time might be a little delayed here, but yeah. Alex Karp said, oh, actually, no, we already covered all this. 114% rule of 40. Commercial growth climbed to 121%, and we yet again announced the highest sequential quarterly revenue growth guide in our company history, representing 61% year-over-year growth. It's quite incredible that the stock is flat on this news. It's a very expensive name. It's very expensive, but they continue to do very well. And I mean, like, disgustingly well. Like, never before seen in my life have I seen a company grow like this. Okay. Clorox up 3%. Exact Science up 5.6%. And Ring Central down 3.6%. What the heck is going on? Grab is at 7 p.m. Eastern Standard Time. Oh, that's not what my thing says. They could definitely be wrong, though. if that's the case, I will. I'll be live around that time anyway. How's BM&R doing? Well, BM&R is right here. They're flat, down 8% on the day, but flat in after hours. Okay, we have 35 minutes till until the actual earnings call for Palantir, which I'm super excited about. They do a video call. Alex Karp will be wearing his famous white T-shirt. That'll be quite fun. He usually says some insane things and calls out Wall Street analysts at the same time. So that'll be fun. Let's take a look really quickly at Fiscal AI and take a look at HIMS. Okay, HIMS up 4%, $46 a share. Take a look at their online revenue growth, which at one point scaled to nearly 115%. No wonder the stock had shot up around then, but that's falling now down to 50%. What was the guide again for that? I'll have to check the guide. Is it in here? Outlook. A revised 2025 outlook of $2.35 billion in revenue. $2.35 billion. What is their first three quarters? About 1.1. What is that? 1.7 billion so far. So they're expecting another 600 million or so. What would that mean for year-over-year growth? Maybe that's why it's not seeing the biggest raise right now. I think that actually means quite the deceleration in year-over-year growth for them. Maybe the smallest they've seen since being a public company. If I have my numbers right, and that's just on online revenue, wholesale revenue. Back to growth. Let me cut off those numbers because that's messing with my chart here. Back to growth, but still small overall on the wholesale revenue side. It's definitely not their focus. All right, what are you guys thinking about HIMS? What are we thinking? Do you guys like what you see as a HIMS shareholder? Long and strong? All right. Cool. I mean, the stock is definitely turning in your favor. Up nearly 6%. Navitas down nearly 11%. Okay. Buying leaps. HIMS 2026. Realty income is absolutely flat. Energy fuels down 1.7%. Vertex Pharmaceutical down 3.7%. Clorox up 3%. You never know which companies are going to do well. I mean, this is Clorox here for crying out loud. You know, like this is, they sell one thing. They sell bleach. Like, Exact Science up 7%. Well, maybe Kathy Wood is not so pissed. Now, there was an initial red candle that we ended up seeing. But let me see if I have their numbers. Exact Science. I have Palantir's, HIMS, Navitas. Let's go through that because we haven't talked about that yet. Down 10%. Revenue ended up being flat. EPS ended up being flat. Guidance. This is what killed them. This is the death. Guidance for Q4, they expected 10 million. Now they're saying 7 million. Huge crushing blow on guidance for Q4 2025 on the top line. Gross margin, slight increase for next quarter as well. Their focus remains on AI data centers. Partnership with NVIDIA for next-gen 800-volt DC AI factory power architecture. We all know this, though. There's nothing too crazy there. We're pivoting decisively from consumer to high-power segments to drive scale, profitability, and long-term value. There you go. That's what the CEO said. Nothing too crazy. It got killed on guidance. That's the thought there. There was another company. I actually didn't see that they were reporting. Upwork up 14%. You never know what company's going to do well here. Geez, revenue larger than expected, up only 4% year over year, but that was better than guidance. A lot better than guidance, actually. That's so funny. EPS was expected at 28 cents. They ended up getting 36 cents. Cash from operations up 23% year over year. Free cash flow up 22% year over year. Guidance ended up seeing a beat. This was a triple beat. They got a triple beat, up 15%. We crossed the 200 million revenue milestone with record margins, reinforcing confidence in our long-term 35% EBITDA goal, said their CFO. And the CEO said, our AI-powered work marketplace is driving strong engagement and multi-year growth. Cool. What else? Do we have this name available yet? Up 8.8%. Fabrinet. Triple beat. Yep, that leads you to go up 8. HIMS up 7%, ladies and gentlemen. Oh my gosh. Here, let's... No, okay, they're not talking about earnings right now. HIMS we covered, Palantir we covered, at least the top line there. I'm just looking at the Palantir numbers. It looks insane. Like every single statistic they beat, they raised. The margins are crazy. Dilution continues to happen, but it's slowing down. Yeah. Yep. Absolutely insane. Michael Burry actually just ended up tweeting. Michael Burry is looking like he's getting bearish on data centers right now. He never tweets, by the way. Just so we're aware. He tweets once every few months. And he's saying that cloud segment year-over-year growth rates are decelerating and that a lot of the capital expenditures are increasing, leading to not quite the returns or margins that maybe we should expect into the future. That's all he had to say. Yeah, he tweets then deletes, but he has tweeted and letting people see maybe where some of his focus is going. That's perfectly fine. Okay. Realty income was flat. I don't have any real news on any of these other names. Exact Science, Voyager Technologies, Ring Central. Nothing like this. No grab just yet. From what people said in the chat, it's 7 p.m. supposedly. It's not what it says on my report card here, but I'm going to believe them because I don't see the numbers. And the stock is not responding to anything right now. Okay. So we looked at the beginning of the session at this chart, but that was before we ended up seeing Q3. Look at it now. We saw that 48%. I said it was going to be harder because, Q3, that's a good quarter. Like we're starting to step into high quarters. How do you grow, 63% on top of a good quarter that does $725 million? And then Carp said, watch me. I'll show you how to do it. How freaking crazy is this? So they had went quarter over quarter from $1 billion to 1.18. Is this not like one of the most sickening charts you've ever seen? Let's take a look at some of these. Like even look at this. Well, that growth has happened. Look at their margin. You think that's growth at all costs? That's high quality growth. Okay, let's look at operating profit and operating margin. Look at this operating margin. When's the last time you've seen anything like this in your life? Year over year, you're making $113 million in operating income. Now, year over year, you had to wait 365 days, you're making $400 million. You want to see the growth rate on that? 247%. Guys, this is quite interesting. Let's look at 1 second. Margins. And we'll look at net profit margin. Yep. Why isn't that showing me for here? I don't know why it's not showing me that. You should be able to have it. Oh, it's only showing June right now. Oh, maybe this hasn't updated yet. Okay, well, the numbers just came out a second ago, so we'll give them some time. Do they have the segments updated yet? No. Oh, no, some of them. These ones are updated. They're probably plugging them right now. So you can just see that growth over time. Or total billings. Look at this. Oh my gosh. Okay, wait, let's look at the growth on this. Let's look at the growth on billings. That is a chart. It's not the highest growth we've seen. That's a little bit of a deceleration in billing. Okay. Maybe that's why we're seeing a flat stock right now, because if that starts to turn, the whole valuation is going to turn. But that's not what guidance even told us. They said growth is going to continue. Look at customer count, customer growth. Customer count, let's make that a bar chart. Look at that. 44%. So this is whenever I assume that they were much closer to being a government-based business, and then they started to get into small commercial businesses, so the growth rate was much higher. But if we take that away, that's more representative of what they've done. Up and to the right. Okay, total commercial clients up 49%. Total commercial customer count, or total U.S. customer count, up 65%. Wow. Remaining performance obligation, 56%, up 56%. Long-term remaining performance obligation is up 73%. Let's just see all those together. That is so crazy to me. This is year over year, right? So whenever they put up these types of numbers last year, they did 96% higher than the year previously. And then the year after that, they did 73% higher than the year that they did 96% higher on. House of Cards. What do you mean, House of Cards? You're just saying words in chat. It doesn't even make any remote sense. House of Cards. Look at their net dollar retention. What is the House of Cards here? I agree that they are expensive. I'm not buying them. I can't stomach the value. How is this a House of Cards? They're finding new customers, and those customers cannot help but give them more money each and every year. Look at this. That's an acceleration, by the way. I need a change in percent of net dollar retention. Yep. Called it. Look at the rate at which that's changed. 10%, 11%, 11.7, 12.2, 13.5% growth on net dollar retention. That is disgusting. Show me one other chart that shows like multiple quarters of accelerating net dollar retention. I bet you can't find it one time. That would be my guess. It would have to be like a cybersecurity name or something like that. But 134% net dollar retention is getting up there with the best SaaS names in the world. HIMS. Let's go back to HIMS. HIMS is up 7.4%. Do they not display this? This metric is discontinued. Net orders, average order volume, or average order value, number of subscribers. They've discontinued all these numbers. Net orders and average order value. That's stinky. Anthony says, what software is this? This is Fiscal AI, a partner of the channel. You can go to Fiscal AI/future, or it's in the description down below to get 15% off. Thank you, Anthony, for such a good plug there. The chat's helping out. No, but it is an awesome piece. You can even like go into here and like legitimately they have the report from today right here. And then I can like get an AI summary of everything that just happened. Key takeaways. The company is actively engaged in discussions with Novo Nordisk to potentially make Wegovy injections and Novo Nordisk oral Wegovy upon FDA approval available through the HIMS and HERS platform. This initiative aims to advance consumer options and access to treatment based on prescriber recommendations. Sorry, my camera, if you guys don't know, is right in front of my freaking screen. And it's literally right there. So it's cutting off half the words, so I have to like read it on an angle. The significant year-over-year growth in both revenue and adjusted EBITDA, combined with an increased subscriber base, underscores the effectiveness of the company's expansion and personalized strategy. Cool. ARJ Brown said, I used your referral for Fiscal AI. Thank you, brother. Yeah, I don't know who. I can't see who uses the referrals. All I know is I get emails from them saying that like my audience is doing like way bigger numbers than they ever would have thought. Because honestly, you guys are fundamentally driven. I drive a very, fundamentals based audience, right? That's just out of design. I don't talk really technicals. If you're looking for these types of technical stuff, you're not going to find it on Fiscal AI, at least not yet. It's all fundamentals driven. You're looking at numbers, ownerships of the companies. If you ever want to see any of this stuff, the reports from Wall Street, the estimates from Wall Street, the news that comes through, HIMS and HERS, like guidance going through how to model it yourself. You can change all these numbers if you want. Yeah. It's all fundamentally driven. Subscription giveaway. I got to ask them about that. That might be interesting. Yeah, that's a pretty good idea, actually. Okay. Let's go ahead and jump back to the stocks. HIMS and HERS up nearly 7%. Navitas down 11. Upwork up 14. Fabrinet up 9.5%. Palantir flat on the day. We'll have to see how the earnings call changes that outcome. I think it will. I would be very surprised. Maybe it's on billings. There might be something to suggest that there's a slowing down of growth. I think we saw that. Let me go back, actually, see if there was a deceleration in government contract revenue. US, so we have US government revenue, which did decelerate just slightly, which is like, if you want to be the most nitpicky person you can say that's decelerating, but it's gone from 53% to 52%. Whoa. You know what? Sell it all, ladies and gentlemen. Look at this chart right here. That's like not even death by 1,000 paper cuts. That's just death by a single of the smallest paper cut. Oh, sorry, my business grew by 52%. Now, I understand you pay for that future growth. So, like, if you're paying for it to continuously grow and it does start to slow, but a single 1 percentage point deceleration in growth does not even suggest that they're not going to continue to grow forward. I mean, look at these quarters where you could potentially suggest, oh, you know, it went from 44.7 to 44.3. That's not nearly the same curve of growth that we've seen previously. So that means they're sort of at the top of that bell curve. It's going to start coming down as the business matures. And the next quarter reaccelerates by, you know, nearly 8% more in that growth. So I actually don't think it means anything. Not yet, at least. It could materialize into something, but I don't think that's what we're seeing so far. Okay. 14 minutes till the earnings call. HIMS and HERS up 6%. Give me one sec. Okay. No, we're not getting any coverage just yet. Is guidance available for which company? For most of the companies that we covered today, guidance was available, at least to some degree. Oh, that's actually a good question. Where is, can we see the price? No, not yet. But before this call, yeah, I mean, they're essentially trading at nearly 100 times price to sales. 100 times Palantir is. Nearly 100 times. Okay. PE, you know, that's going to be closer to like, actually, it'll drop down from this quarter, but still very expensive. I don't even know what other companies would even be that high. CrowdStrike, Cloudflare. I don't even think Rubrik's that expensive. Like what tech names would even be even remotely that high? Maybe some of the sort of neo cloud names, but they are growing even faster than Palantir. You know, and at a much smaller valuation. This is a $500 billion business. At least it was whenever it rose to $220. Tesla? I don't think Tesla is trading that expensive. I don't think so. Let's take a look. Yeah, dude, listen to this. You said Tesla. So Jonathan, I'm just going to use you as an example really quick. I love it. Everyone says Tesla is so expensive. I say Tesla is so expensive. There's a huge difference here, however. Tesla is not growing nearly as fast as what Palantir numbers just put up. Like, essentially, we just saw 11% year-over-year growth on Tesla. You can find that in most names. Okay? But on their price to sales, 15.4 times. And honestly, Kratos and all those names, I don't consider those more expensive. Those are tiny, tiny, tiny names. What's the ticker? KTOS? Yeah. 15 billion. Here, wait. KTO, I'll look at it through Fiscal AI really quick. So they're not super yeah, their price to sales is 6 times, dude. 6 times. 6. And Palantir Palantir's is 100. Tesla's is 15 times. You get what I'm saying? Like, it is by far, nothing comes close, the most expensive name in the stock market. And it's $500 billion. So the size of the customer you need to push your valuation higher gets very hard to find. And they will find it. I'm not saying that they are going to shrink. I'm not even suggesting that. I'm just suggesting if you're looking for a company to expand their multiple, like for example, SoFi or something like this, like a company that I cover. If you're like, hey, is there a possibility where we don't see another earnings call, but yet their stock doubles? Well, put their price of sales at like, I don't know, 20 times or 22 times. Are there other fintech names that are that expensive? Yeah, Robinhood trades at, 36 times, something like this. So there's other comps that you could say that it, is reasonable. How does Palantir double, get a 200 times price to sales, $100 trillion or $1 trillion market cap before next earnings? That gets harder and harder to continuously expand your multiple. And they can do it. They can if they put up 65% growth next quarter, and then 70, and then 75% growth. That's possible. But yeah. Alex Karp said some of our detractors have been left in that kind of deranged and self-destructive befuddlement. This remains the beginning, the first moment of the first chapter. I mean, so maybe it's possible. Maybe they have some large deals coming ahead that they just think, hey, this company's going to continue to do well. And also, they don't get to dictate what the multiple of their stock is either. So, yeah. Let's get ready for the earnings call, which is actually a video earnings call, and we'll have the price of the stock on the screen as we cover it. Cool. 6 minutes, 40 seconds. HIMS and HERS up 6%. Palantir up 1.5%. Navitas up 11.9%, 12%. Vertex Pharmaceutical down 3.5%. That's been flat, for the most part. Clorox still up 3%. Diamondback Energy down 1.3%. And Upwork, wow, up 18%. That was the real winner today. I missed it. I didn't even think about it. Upwork. Oh, sorry. If I said up on Navitas, I meant down. Down 12.5%. No bueno. Guidance was 7 million. The street wanted 10. Okay. Fiverr in 2 days will report. I mean, maybe that's a little piece of alpha there. Was Upwork's quarter. I've actually used Fiverr before. I've never used Upwork. I find it very confusing. I don't even know what I can do on there. Fiverr I find much more easier to use and easy to understand what the heck they're even offering me. Maybe I'm an idiot. I don't know. But I've used Fiverr probably 10 times in my life. I've used Upwork 0 times. Okay. Let's see here. Oh, also, okay, this is important too. Guys, if you guys like listening to earnings calls, let me know if you guys want to do in the morning tomorrow, Shopify. Do we want to do Shopify tomorrow? There's also Uber, Spotify, Pfizer, Ferrari, Hut 8, Marriott Hotels, Hertz. Huge day tomorrow, just in the morning. Shopify, for those that don't know me, is my second largest position in my portfolio. So trust me, I'm used to buying expensive tech, but there's a difference. Expensive tech, there's a wide range whenever you look at expensive tech. But Uber's really important. Shopify's really important. I want to listen to that. In the after hours, we're definitely listening to AMD. We're listening to AMD, and we're going to follow the numbers for SMCI, Kava, Upstart, Axon, Pins, Toast, Kratos, Copang, Rivian, Tempest AI, Marathon Digital, Zeta. It's packed tomorrow. Probably the most busy day in earnings history is either tomorrow or Wednesday. Wednesday's packed too, but I got to do Hood on Wednesday. Okay? I also bought a decent chunk of Chime today, so we're going to follow earnings and hope that I don't lose my shirt on that stock. Really hoping things go well for me on that name. I don't know, but I've got a report coming out tomorrow that might make it pretty interesting. It's not anyway. Earnings for Palantir start in 2 minutes and 45 seconds. A stock called Chime, CHYM. They are a fintech. They do digital-only checking and savings accounts. They have debit cards. They're for people that essentially make, lower income. But the growth has been like nothing I've ever seen. I shouldn't say that, but they're growing very, very well, and their multiple is just shot. It's so cheap for what you're getting. I believe. I'm not saying, the company is newly public, so there's not a lot of data to go off of, to be fully honest with you. So understand the risks. I'm not even suggesting that you go and buy that stock, but it is definitely worth putting on your watch list just to follow it because it is getting so cheap. The company just IPO'd recently at $35. It ended up popping up to $44. Now, today, you could have got it at $16.18. Okay, Palantir earnings call is starting, ladies and gentlemen. Whew. Okay. Let's switch over. Here, I'll do it like this, and then I don't hear anything. There's no noise, anything like that. You guys see this? Okay, not hearing anything though. Bear with me one sec while I just refresh the page. It's not even 5 o'clock yet, so I guess I shouldn't be freaking out just yet. Okay. Until the video call, I'm just going to adjust the screen really quick, just so we can get a better look. Okay. We're not going to be listening to HIMS. We're going to be listening to Palantir for now. Just because this is a $500 billion company, and the success of this business literally can move markets. Okay. It's important to listen to these size businesses, especially the ones that are creating this much value to the customers that they're working with. So I want to know who they're working with. I want to know what they're doing for those customers, the financial impacts there, what CARP has to say about the short sellers going forward. Let's jump in.
The results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shams Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We had a monumental third quarter, shattering expectations yet again. Our overall revenue grew 63% year over year and 18% sequentially. We outperformed across the board, driven by strong execution in the U.S., which accounted for 3/4 of our business in Q3, growing 77% year over year and 20% sequentially. Our Rule of 40 score soared to an unprecedented 114, up 46 points year over year and a full 20 points since last quarter alone, reinforcing our position as the defining enterprise software company of our generation. Our U.S. commercial business grew an incredible 121% year over year and 29% sequentially, driven both by insatiable demand and the quantified exceptionalism compelling customers to scale AIP across their operations. Organizations are embracing an undeniable truth. Real enterprise AI at scale requires Palantir. We're seeing that AIP, again and again, is the only platform delivering transformational impact in this market. And critically, AIP is the only AI platform that has an actual plan for compounding your enterprise's AI leverage, not just the model maker's leverage over you. Sharing this leverage with our customers is our highest priority. Our whole company is singularly focused around value creation for our customers, and I'm proud to share with you all the fruits of our labor. We closed our highest TCV quarter ever at $2.8 billion. Underlying this performance, we closed a staggering 204 deals worth $1 million or more, of which 91 deals were worth $5 million or more, and 53 deals were worth $10 million or more. In our U.S. commercial business, which now accounts for 34% of our overall revenue, we closed $1.3 billion in TCV, a milestone achievement for the fastest growing area of our business, with a more than 6x year-over-year growth rate on a dollar-weighted duration basis. The trajectory is clear. Customers are converting to larger enterprise agreements in short timeframes, reflecting both the expanding scope of their AI ambitions and the immediate impact our software delivers. A leading medical device manufacturer signed a multi-year expansion just 5 months after their initial contract, increasing ACV more than 8-fold. 2 weeks into their initial contract, the conversation evolved from a single use case to pursuing the opportunity of becoming an AI-first enterprise. Their CEO approached me to embrace a shared vision for an enterprise-wide AIP deployment to transform their entire organization. This transformation reflects a broader pattern we're seeing across our customer base. AI is a strategic imperative owned at the C-suite level, with executive leadership recognizing that enterprise-wide AI adoption is the defining factor separating the AI haves and the AI have-nots. We're seeing C-suite-driven AI transformations across our customers. At a leading insurance company, the CEO has taken personal ownership of their AI transformation, meeting with our team regularly to orchestrate a company-wide transformation around AIP, reimagining every function from underwriting to claims processing, leading to a significant expansion of our work together. Our partnership with TWG Global, named Vergence.ai, continues to gain momentum, as TWG's Thomas Toll noted, quote, "What was once a competitive advantage is now a competitive necessity. Companies that fail to incorporate AI into their core operations will be outpaced by those that do." These examples underscore what we are seeing. We are the only platform bringing true transformational impact to the enterprise AI market. Turning to our U.S. government business, revenue grew 52% year over year and 14% sequentially as we continue to deliver mission-critical capabilities. We remain deeply committed to our founding mission of supporting the U.S. government, honored by the privilege of equipping our nation with transformative software that actually works. We remain focused on delivering the most advanced defense capabilities in the world to the U.S. government and internationally to our allied partners around the world. The momentum we're carrying into Q4 is extraordinary. As we look towards the end of the year, our mission is clear. Deliver the production capabilities that turn AI from promise into performance for the enterprises defining the future of their industries through AIP's compounding AI leverage. I'll now turn it over to Shyam.
Thanks, Ryan. 20 years of grinding has built a unique moat and a growing lead. Our products were built for this moment, and the numbers continue to show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And this is only possible with ontology. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand now and in the world ahead. The most significant product developments are the accelerating progress in our AI applications inside of AIP. AI FDE, our AIP native development agent that understands how to connect to data sources, how to integrate and transform data, how to create ontologies and functions and build applications. It's unleashing incredible speed and productivity for our FDEs and customer developers alike. At one customer, 2 human FDEs spawned an army of AI FDEs to migrate a customer off their legacy data warehouse in 5 days, something that would have taken an army of SIs up to 2 years. This is not a prototype, this is production. Across our customers, the results are shocking. AI HiveMind is a new AIP capability that orchestrates a swarm of dynamically generated agents to tackle hard problem solving, idea generation and refinement, and executable proposal generation that is integrated with ontology and therefore aware of the context of your enterprise. AI HiveMind was originally developed to solve extremely complex problems in the classified space, but it's already been used to help our commercial customers identify bottlenecks in their supply chain, proactively developing possible solutions, and then leveraging AI FDE to code that up into an actual solution. In the government space, AI HiveMind is able to take its proposals and generate intricate mission plans right in Gaia and Maverick. Our focus with AIP continues to be enterprise autonomy, our normative view of where the value is for AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed-loop evolution of the business with AI possible because of AIP and ontology. We continue to make investments that allow enterprises to extend AIP to the far edge. Edge Ontology is a new lightweight implementation of ontology that runs on mobile devices and enables customers to build mobile applications or embedded software for hardware, things like drones and robots, and is fully integrated with your enterprise's AIP instance. Turning to field-facing updates, the U.S. Army issued an official public memo directing all Army organizations to consolidate and centralize on Vantage, the Army data platform built on Foundry and AIP. The Army views this not merely as a technical decision, but a cultural decision, enabling the data-driven decision-making that continues to make our Army the most lethal in the world. This directive will enable the Army to rapidly sunset legacy systems and enable more investment in the Army's future force, concept, and systems. Warp Speed and the American Tech Fellowship, our early investments to support manufacturing and reindustrialization in America, are bearing fruit. While Warp Speed launched by helping new defense entrants meet their surging production goals, it's now being rapidly adopted across the traditional defense industrial base and the maritime industrial base. The second cohort of the American Tech Fellowship will be wrapping up in the next few weeks. We started the American Tech Fellowship because we noticed that many of our best builders were frontline workers. They don't come from conventional consulting backgrounds. They don't have formal computer science backgrounds. To highlight a few of these folks, Mason, a Louisiana-based civil engineer, is building AI applications for more accurate estimates for heavy construction projects, something that is only going to grow with our reindustrialization. Michael, who works for a potato farm in North Dakota, is streamlining its operations. And Cody from Georgia, who is a utilities expert, is building in Foundry to deliver safe, reliable energy across the South. These Americans are the true face of innovation, underscoring that it will be the American worker with AI that drives reindustrialization and American prosperity. Our customers have taken notice and asked us to create American Tech Fellowship programs for their employees specifically, to include Lear, who highlighted their fellowship in their recent earnings call. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. We had an outstanding third quarter, achieving a Rule of 40 score of 114, our highest ever, by 20 points. We also generated our highest ever reported revenue growth rate of 63% year over year, exceeding the high end of our prior guidance by 1,300 basis points and representing a 3,300 basis point increase compared to the growth rate in Q3 of last year. On the back of this extraordinary strength, we are guiding to revenue of $1.329 billion in the fourth quarter, representing 13% growth quarter over quarter, our highest ever sequential revenue growth guide, and 61% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.398 billion, representing a 53% year over year growth rate, an 8-point or $252 million increase over our full year 2025 revenue guidance last quarter. In addition, we're raising our full year U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104% year over year, a 19-point increase over the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 77% year over year and 20% sequentially in the third quarter. Our U.S. commercial business grew 121% year over year and 29% sequentially, and our U.S. government business grew 52% year over year and 14% sequentially. We delivered these exceptional top-line results while also achieving our highest ever reported adjusted operating margin of 51%, exceeding the high end of our prior guidance by 500 basis points and highlighting the unit economics of our business at scale. Our revenue and profitability drove a 20-point sequential increase to our Rule of 40 score from 94 in the second quarter to 114 in the third quarter. On a trailing 12-month basis, we generated $2 billion in adjusted free cash flow for the first time in the company's history. Turning to our global top-line results, third quarter revenue grew 63% year over year and 18% sequentially to $1.181 billion. Third quarter U.S. revenue grew 77% year over year and 20% sequentially to $883 million. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 65% year over year and 18% sequentially, and third quarter U.S. revenue grew 78% year over year and 20% sequentially. We closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. This eclipses our prior highest quarter of TCV bookings just last quarter by nearly $500 million. Customer count grew 45% year over year and 7% sequentially to 911 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 38% year over year to $83 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 73% year over year and 22% sequentially to $548 million. This is the fourth consecutive quarter that revenue from our commercial business has been larger than our U.S. government business. Excluding the impact from strategic commercial contracts, third quarter commercial revenue grew 77% year over year and 22% sequentially. We closed $1.4 billion in commercial TCV bookings, representing 132% growth year over year and 32% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Third quarter U.S. commercial revenue grew 121% year over year and 29% sequentially to $397 million. Excluding revenue from strategic commercial contracts, third quarter U.S. commercial revenue grew 126% year over year and 29% sequentially. In the third quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 342% year over year and surpassing the billion-dollar mark for the first time. Over the past 12 months, we closed $3.8 billion of U.S. commercial TCV bookings, a 217% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 199% year over year and 30% sequentially. Our U.S. commercial customer count grew to 530 customers, reflecting growth of 65% year over year and 9% sequentially. Third quarter international commercial revenue grew 10% year over year and 5% sequentially to $152 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $2.9 million for the quarter. We anticipate fourth quarter 2025 revenue from these contracts to be between $2 to $4 million, compared to $9.6 million in the fourth quarter of 2024. We anticipate 2025 revenue from these contracts to be less than half of 1% of full-year revenue. Shifting to our government segment. Third quarter government revenue grew 55% year over year and 14% sequentially to $633 million. Third quarter U.S. government revenue grew 52% year over year and 14% sequentially to $486 million. This growth was driven by continued execution in existing programs and new awards, reflecting the growing demand for AI in our government software offerings. Third quarter international government revenue grew 66% year over year and 16% sequentially to $147 million, bolstered primarily by our continued work in the UK. As previously mentioned, we closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. Net dollar retention was 134%, an increase of 600 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year, as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the third quarter with $8.6 billion in total remaining deal value, an increase of 91% year over year and 21% sequentially, and $2.6 billion in remaining performance obligations, an increase of 66% year over year and 8% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $601 million, representing adjusted operating margin of 51%. Q3 adjusted expense was $581 million, up 8% sequentially and 29% year over year, primarily driven by our continued investment in AIP and technical hiring. We continue to expect expenses to increase in the fourth quarter as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Third quarter GAAP operating income was $393 million, representing a 33% margin. Third quarter GAAP net income was $476 million, representing a 40% margin. Third quarter stock-based compensation expense was $172 million, and equity-related employer payroll tax expense was $35 million. Third quarter GAAP earnings per share was 18 cents. Third quarter adjusted earnings per share was 21 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 114% in the third quarter, a 20-point increase to our Rule of 40 score from the prior quarter and our 9th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 102% for the full year. Turning to our cash flow. In the third quarter, we generated $508 million in cash from operations and $540 million in adjusted free cash flow, representing margins of 43% and 46% respectively. Additionally, we achieved $2 billion in trailing 12-month adjusted free cash flow for the first time. Through the end of the third quarter, we repurchased approximately 2.6 million shares as part of our share repurchase program. As of the end of the quarter, we have $880 million remaining of the original authorization. We ended the quarter with $6.4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q4 2025, we expect revenue of between $1.327 and $1.331 billion, and adjusted income from operations of between $695 and $699 million. For full year 2025, we are raising our revenue guidance to between $4.396 and $4.400 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104%. We are raising our adjusted income from operations guidance to between $2.151 and $2.155 billion. We are raising our adjusted free cash flow guidance to between $1.9 and $2.1 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Greetings. By any normal or even reasonable standard, these are not normal results. These are not even strong results. These aren't extraordinary results. These are arguably the best results that any software company has ever delivered. That's not hyperbolic, despite what your analyst friends may want you to believe, because they've been wrong at every price. They're wrong on at every single round. But of course, they're persuasive, and they're not investing their own money. But a normal enterprise company should not have a rule of 40 above 100. A normal enterprise company at our base should not have over 100% U.S. commercial growth, should not have 77% growth in the U.S. And by the way, that growth is being held down by a stagnant Europe, which is still a significant part of our business. So the pure unvarnished numbers are 77% growth off of a massive, significant base with very significant cash flow, with a company that throws off a rule of 40 of 114. And then if this world was at all sane, every single person in the financial world would stop and say, how did this happen? How did a company which stood by the American warfighter, Marines, special operators, people in clandestine services, who stood up for our right of free speech and was really the first company to be completely anti-woke, how did this company stick up for the American warfighter, actually give normal Americans venture quality results? So one of the issues we have with the arbiters of truth is it was the American worker that we supported and the American worker that we helped make rich. And the arbiters of truth somehow did not participate in that because they were such experts. And of course, but what these numbers show is doing that and taking the American worker along with it, and doing it in a way that foreshadowed the future. FDE, Ontology, Foundry, making each specific institution, making the American warfighter fight the way the American warfighter is born to fight, empowering the tenets of being, free and having the ability to do creative things in the battlefield context, and then taking enterprises, instead of selling them commodity, parasitic software with a massive sales force, with a kind of lumbering, jargon-bearing leaders offering you steaks and dinners and other things we shall not mention, in order that you turn the value, the high value revenue of your enterprise over to them in return for these accolades. We created direct alignment with our customers. And what does that mean? It means when our customers have a unique and tribal way of doing something, whether it's underwriting or fighting or making workers even more valuable, we put an FDE, we orchestrated an ontology, we take the tribal understanding of their business, the specific nature of their business that makes them particular and valuable and lethal, and we empower that. And how do we participate in that? Unlike seemingly in the most obvious way, we are downstream from the value creation. So when you see 141 or you see 77% or 63, and you ask, and by the way, with really a workforce that is not growing in any way linearly proportional to that growth, and also with a sales force which is declining, which seems improbable. The reason why that's working is because we are making our clients more money, or we're making them more dominant on the battlefield, and they're paying us a subset of that. And this is why these numbers are so extraordinary. The sociological and political version of this should be, wait a minute, how can we learn from this? How can we implement institutions? By the way, we have all these people talking about an AI bubble. I'll tell you what 114 proves. There is a massive part of the AI market that actually cares about value creation, and that's the part we own. And we own that part because to do this, you have to have FD orchestration, you have to have ontology, and you have to have foundry, and you have to have access to the game. And you have to have deep understanding of how to do that. And you have to have done this for a very, very long time with products. By the way, and then the products are getting better and better and better and better. And I'll let Shyam talk about what we're doing on the battlefield to the extent that he can, but you see the very similar trajectory where we're giving America, both in industry and in government, a massive unfair advantage. And again, you see it, like if you look at our numbers, look at how poorly Europe is doing. Look how well America's doing. Look how we're doing this. And again, it's not just top line. The rule of 114 that we have shows top line and bottom line growth that is distinctive, massive, and unique. And on top of everything else, there is this issue in the U.S. that we're all focused on at Palantir, which is what portion of the GDP growth that we're blessed to have in this country, meaning GDP growth defined or helped out and bolstered by AI, what percentage of that is available to the American worker? And so when we're AI, GDP availability for the American worker, meaning do they participate in this growth? Or is it just people around this table who are getting richer and richer? And then you see our platform on the battlefield, as Shyam was mentioning, the people doing the coding in AIP are vocationally trained, smart Americans with specific knowledge. They don't have, and actually, the people on the factory floor, very same thing. People across the nation, truck drivers, anybody with specific domain expertise is more powerful, more valuable in our product than they were yesterday. In fact, the real misalignment of AI is with people with commodity, like high-trained, elite institution, general specialist. That's just not as valuable as it was. And yes, the destructive, positive destruction of capitalism is going to put that class of people, typically the class of people that also is kind of skeptical of Palantir, under enormous pressure. But it is what I see in these numbers, and what I think we see in these numbers is, to put it slightly over the top. Yeah, we were right, you were wrong, and we are going to go very, very deep on our rightness because it is exceedingly good for America. It's exceedingly good for the American economy. It's as good for American workers. And you know what? I really enjoy turning on TV and seeing some analysts explain why some other company is better than ours simply because they didn't make any money on our company and probably aren't. And we're just going to keep going and going and going. And then we're obviously not going to forecast for next year, but I would say if you're thinking about how this company is going to go, look at our ability to value create, look at our ability to create revenue on the top end, look at the unit economics of our business. If you're a technical expert in how do you evaluate business, evaluate those numbers against any other business you've ever seen and then make your decision. But yeah, I'm wildly enthusiastic. I think we're wildly enthusiastic. And thank you for those of you who stayed with us to enjoy these numbers, especially Palantirians who work day and night to deliver these kind of numbers.
Thank you, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a few questions asking, what do you see as Palantir's unique differentiator that others may not understand?
Well, Alex mentioned a bit of this here. It's become fashionable, actually, for lots of companies to start hiring FDEs. The Financial Times had an article about how it's the most popular new job title. But what you see is that they don't really understand it. It's just mimetic. And everything Alex just said, like, we build software that works, not software that ought to work. We build software for the world as it exists, not a world that never was. And this ability to find what's true, that comes from the FDE. Our measure of success is not did we sell the software, it's did we solve the problem. And we have built an entire software stack over 2 decades downstream of creating value for our customers. That led to the ontology a decade ago, more than a decade ago, which is a fundamental prerequisite to getting value out of LLMs in the enterprise. And this past year, it led to AI Hivemind and AI FD.
The other thing, which is implicit in that, is the way we work forces us to go up the chain of complexity every day. So we're taking on the most painful, most integral, most valuable parts of the stack in every enterprise. And it's precisely because that's the way we actually lever our ability to deploy and orchestrate FDEs. That's the way we make our product stronger. And quite frankly, that's the way we produce these numbers, because the closer you are to the front line of the very complex problem that a black box was not meant to solve, cannot solve, and at this point everyone knows a joke to believe it could solve, that's where you and by the way, it's the safest position for us, because this company, we will always believe that we are outsiders. We need to be in the place where the most valuable problem is being solved, because that's the way we end up staying, solving the problem tomorrow, and the way we get paid.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Which one?
And then with the actual.
Mr. Dan Ives, we don't see you.
Hello.
Oh, there you are.
Yeah, great. Look, obviously another monster quarter for you guys. Congrats. So my question for you is, for Alex and the team, can you just walk through just the accelerated sales cycles that you're seeing from so many companies that have gone to the boot camps? What surprised you from when they come to you at that first sort of, contact to now actually launching deals? I mean, maybe you could talk about that just in terms of everything you're seeing anecdotally.
Great. Thanks, Dan. So I think, we look at U.S. commercial. We closed $1.3 billion in TCV. That's 6x on a dollar-weighted duration basis from what it was a year ago. And of those deals, 83 were worth $1 million or more, 40 were $5 million or more, 21 deals were $10 million or more. I've been involved in a lot of those directly. I'm feeling exactly what you're asking on the ground from customers. And what's happening now is from the C-suite across the company, customers are coming to us looking to not just say, let's do a use case. The customers where we're having the most impact are coming to us saying, how do we deploy this across our entire organization? How do we reorganize our entire organization around Palantir and AIP? And that's what's happening on the ground. And we're singularly focused on delivering the value to the customers, and that's our go-to-market. How do we get the product to them and deliver the value?
Where Ryan is really very much on the front line here is, there's both how many customers approach you. I think where we're seeing the biggest shift is the customers who've approached us very quickly want to move to, how would I change my enterprise to express it in a way that's most valuable according to my terms in your product? And then literally want to reorg. A shorthand version that we often use is, you used to have to take your company private to change the unit economics of it. Basically, just like we're providing venture results, high-end venture results to normal investors in the last couple of years, what we're doing actually in enterprises is providing a private equity-like transformation in the public markets, in the public space, under the current leadership. And that's essentially what our best, and by the way, the other thing Ryan would tell you about is our newer clients have much higher expectations of us. They're essentially, I want to transform my business. I want to do it in months. I want to do it in the public eye while being in the public market, mostly, not exclusively. And I want you to not only do the product side, but also tell us, how would you actually implement AI, Foundry, Ontology, FDE model, and our tribal knowledge to do that? And it's a completely different game. We used to have to beg and plead to be when we first started talking, we were begging and pleading to be at the margin of a problem that could affect a subset of the business. By the way, Shyam, it's unfortunately, he can only tell you 1% of what he's involved in, but this is exactly the same in the U.S. government around the world. It's the things that we're sitting on and working on are crazy, crazy important, and they're not downstream of the problem. They are the problem, and we're reshaping them.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hello.
So I'm going to do, as usual, a couple of questions, one on commercial, one on defense or government. On commercial, I'd like to follow up to Dan's question. And let's see if you can discuss what changed from a behavioral perspective, from a customer's perspective, to see this accelerated appetite to incorporate Palantir, to not only accelerating how many customers you have, but also the existing customers go up the value chain. And what changed internally as well? We recently saw in a visit these like AI agents or AI FTEs, like how are you incorporating tech internally to be able to accelerate and catch up with that demand? And on the government side, US government up 50% plus is really impressive. And how do you think about opportunities like Golden Dome going forward, piling up to this?
Well, you guys want to answer these questions? I think that there's the external one, which is like, what does it feel like? That's clearly you. The internal one is a really subtle question, and I don't know, anyone should jump in there. And then obviously you should have Sham opine on, yeah.
Yeah. Well, do you want to start with commercial or?
Sure. Yeah. I think on the external, I think it's like going deeper and deeper and more like tangible results with customers where there's a network effect incoming, like customers sharing impact that we're having and direct impact we're having with customers. Customers are seeing as it's a continuation of what we've been doing, but going deeper and deeper with the customers on that impact. And I think that, what we're seeing is more and more are now coming to us saying, and the ones that are most impactful are coming to us saying, let's do more.
Ryan is our best at being a wonderful, I'll just give a vulgar version here. Our clients realize the choices suck, basically, and they've tried a lot of stuff. It hasn't worked. And then we're in so many verticals. Let's just say we're in vertical 252 and we dominate for one customer. People see that. And then they're like, oh, well, I'll try this with some, I don't know, knockoff, half fake thing. It's just like, and then a lot of people really still don't understand that are still trying to do this long migration where, LLMs are going to perform as if they're LLMs and ontology and as if the LLMs were not a commodity. But then in the marketplace, they see the final result of someone else using ontology, Foundry, FDE. And now it's like, wait a minute, I'm paying hundreds of millions of dollars and getting nothing. And the person down the road I kind of look down on is way ahead of me, and their unit economics are transforming overnight. And that just shifts the whole conversation. Because then we're like, okay, well, if you want it to work, you're going to have to do these 5 things. And these things are like, you're going to have to talk to Ryan, and you're going to have to, occasionally meet with me, and you're going to have to actually allow us to come in with engineers, and we're going to have to actually work on the problems that are valuable for your business, and also look at the costs that are dragging you down. By the way, the cost for most businesses is not just the actual money they're wasting. That wasted money creates an ecosystem of waste. They're talking to all these vendors all the time about all these things that will never work instead of solving the problem. It's like, and so getting the pathogens out of their business is a real issue, and now they're really, really interested in this. And then on the internal front, I would say, it's just we have to double down. The most important thing for us internally is, with all this success, we do not want to give up the unique attributes of Palantir and somehow purchase fake ways for us that are artificial for us. And so making sure we are very, very close to the problem and making sure everyone here, like if you heard our internal dialogue, it's much more like, who's on the factory floor here? What are we doing internally? How do we make sure our products are better and better? How do we make sure, say, Sham, who's a savant at going around and figuring out what the underlying tech issue is, how do we making sure we have the best product team and the very, very exact right fit for every single deployment across our deployments that we care about, especially mission deployments, which we highly, highly overvalue in terms of our time and energy. And how do you make sure Palantir stays as tribal and cultish and unique as it was 20 years ago? How do we double and triple down on that? And how do we recruit the right people? And then internally we power ICE, we power efforts to defend America and Ukraine and with allies. We're on the front line of all adversaries, including vis-a-vis China. And we support. We're at ICE, and we've supported Israel. Okay, these are very controversial. I don't know why this is all controversial, but many people find that controversial. Okay, so how do you align people to focus on these things in a way that is actually beneficial for us and our clients? These are really hard and tricky issues that we spend a lot of time. I would say, as an overarching thing, because what we found is the more we focus on our internal dynamics, the better our numbers are. That's why we have less salespeople, and we have 77% growth in 75% of our market, 121% growth in U.S. Comm. Please tell that to some of your friends. I don't even understand how they can look at these numbers and not drop the key out of their Motel 6 and just like say, I mean, they're bombastic numbers, but it's like internal focus.
I'll make the mistake of trying to follow Alex there and just say on the internal side with AIFDE, that's why we actually originally built it. Our headcount has grown roughly 10%, but revenue grew 63%. How are we doing that? We've made our FDEs wildly more productive. And I mean, so much so that we decided to give it to our customers, and we've started to make our customers more productive. When you have a note like the Army Vantage note, where the Army's consolidating into the Army data platform, you now have an army, literal army of green suiters who need to become proficient developers in the software. And you have a generation of green suiters whose first interaction with the software is going to be with AIFDE. They're going to be superheroes on day one. I think it's accelerating adoption, it's accelerating understanding, like the depth of adoption, not just are you using it, but how much of it are you really using, how much of it can you understand? And then quickly on your comment on the U.S. government business, the number of opportunities out there are great. I can't comment on all the opportunities you mentioned there, but whether it's NGC2, the continued growth of Maven, I mean, we have, of course, America's involved with 3 conflicts right now in the world, from Europe, the Middle East, and in our own hemisphere right now. And things are getting a little spicy in Africa.
By the way, let me say something slightly political, and I'm not saying other people agree with this, but when people are attacking our soldiers for stopping fentanyl from coming to this country, I want people to remember, if fentanyl was killing 60,000 Yale grads instead of 60,000 working class people, we'd be dropping a nuclear bomb on whoever was sending it from South America. So it's slightly like we in this at Palantir, we are on the side of the average American who sometimes gets screwed because all the empathy goes to elite people and none of it goes to the people who are actually dying on our streets. And that's why, it's like when you have an open border, it means that the average poor American earns less. I know my fellow progressives believe having an open border is going to make things, but that's because they're actually repping elite people instead of the working class. And the same thing in South America, it's like, to believe our Constitution does not give us the right to stop 60,000 deaths a year of working class men and women is insane. And this country is right to stop that, and I am very proud. I don't know all the efforts we're involved in, but to the extent we're involved in these efforts, I and most Palantirians are very proud of this.
Hear, hear.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're rocking along. Please turn on the conventional television and see how unhappy those that didn't invest in us are. Enjoy, get some popcorn. They're crying. We are every day making this company better, and we're doing it for this nation, for allied countries, and also for and I never really liked the term retail investors. How about sane people who put up their own money and fight for us? And by the way, you are fighting for the right side of what should work in this country. Meritocracy, lethal technology vis-a-vis adversaries, products that spread GDP to working class men and women by making their value creation higher. And by the way, your bank account. And thank you for that.
Thank you. That concludes Q&A for today's call.
Palantir. Okay. Wow. Yeah, I mean, he's a strong speaker. You don't have to agree with everything he said. And, you know, he knew what he was doing, or he knew the risks that he was taking whenever he was talking about those political statements. I'm not necessarily saying that they're even wrong to state, but you know, that's going to create more fuss depending on the side of the political aisle that their opponents or you know, people with microphones have. So I mean, but Alex is used to it. I mean, a hater is not something that he is you know, new to or something like this. Their company has been going through it ever since they've been supporting a certain side of the war. But anyway, in terms of the overall stock price, and I can just switch it over to here. We're essentially flat on the day. Yes, growth came in extremely strong and much higher than what people expected. I think the stock is sort of absorbing that a little bit and saying, hey, you know what? Why don't we just allow the multiple to come down a bit while keeping the exact same price? Some people are taking some chips off the table. They're not ready to see this become a $500 billion business. They're close. They're close, but not quite at these prices. So, yeah, we'll keep up with that. Okay. I'm going to be back at 7 o'clock, 7 p.m., and then again at 9:30. I'll tell you what's on the schedule. One, we have a lot of news to cover throughout fintech and artificial intelligence. Okay, that's what's going to come on at 7. That's the Big Tech Frenzy. It's a daily live stream. At 9:30 on Mondays, we have a Robinhood stock weekly with other special guests. So for that show, by the way, HIMS selling off some of their earnings, they must have said something. I can immediately tell there was some sort of comment made right on this red candle that people did not agree with. Is Grab earnings out? We're up 2%. Okay, hold on. Let me just take a quick peek-see. And then, but at 9:30, we have a Robinhood-based call that's going on. Grab is seeing a little pump up, 2.2%. Is this on no news? Okay. Shopify earnings are tomorrow morning. I think I'll have to be live. I think that's what you guys want. So I'll have to give the people what they want. All right. Let's just check. Oh, no, these earnings might not be out for a little bit. Maybe much, much later tonight. I don't know why it's going up. But yeah. Palantir actually completely flat now. Just slightly negative. Essentially flat after the call and the results are out. You guys are saying Grab's numbers are out, but I'm not 100% sure that's true. See investor relations. I'm on investor relations. Let me go to quarterly. That's Q2. Q3 isn't out yet. Q3 earnings call is at 10 p.m., which leads me to believe that it's probably going to be released at 9 p.m. I'm not seeing the Grab thing. Q3 is out. Sanjay, do you have me on X? Can you send me the link to that? Or email it to me? Because if we have the numbers, I'll go through, but I'll share my screen. Earnings. Let's switch this to Grab. Done. Transition over. Remove that really quick. I'm not seeing Q3. They're all grayed out, my friend. I'll refresh. I'll refresh again. Nothing yet. Oh, it's here now. Okay, I see it. All right. All right, you were right. Okay, let's read through this a bit. Sorry, one sec. Wow. Okay. Revenue grew 22% year over year, or 17% on a constant currency basis to 873 million. On-demand gross merchandise volume grew 24% year over year, or 20% on a constant currency basis to 5.8 billion. Profit for the quarter of 17 million, adjusted EBITDA of 136 million, up 51% year over year. Adjusted free cash flow of 283 million on a trailing 12-month basis. Okay. Yeah. What's group MTUs? Am I just not thinking of that properly? Per MTU? Oh, monthly transacting users. Okay. On-demand gross merchandise volume per monthly transacting. I would like, anyway, I won't be so picky. Yeah, per user basis is growing. The amount of members is growing 14%. So that's both great. Partner incentives grew 40%. Am I supposed to be looking at that as a negative in terms of that's what you're paying out to get them to stay on the platform? That kind of incentive? Sorry, I don't follow Grab. I'm here to learn. Revenue up 22%, operating profit. Net cash used from operating activities. Adjusted free cash flow, 203 million, up 37% year over year. Okay. All right. Next quarter, for full year, 21 to 22%. I guess that's not on a constant currency basis then. And adjusted EBITDA of, 57 to 60% growth. Previous was 47 to 53% growth. Double increase on, top line wasn't really an increase. They increased the bottom line, or the bearish end of that guidance. Okay. Cool. Let's go see the quarterly. Yeah, that's still not out. I want to see a little presentation. I don't want to bore you guys with this. Mobility GMV grew, growth accelerated to 20% year over year. Mobility segment adjusted EBITDA was 8.9%. We increased active driver supply while optimizing our existing driver supply to meet growing demand for our services. Loan portfolio grew 65% year over year. Wow. In Indonesia, Superbank continued to drive strong growth while deposit customers grew over 20% quarter over quarter to reach an all-new high in September 2025. This growth is driven by innovative products such as OVO Nanbong, which enables users to benefit from the seamless payments experience of OVO Wallet while enjoying the yield of Superbank savings account. Autonomously intelligent ride, our first AV service for consumers in Singapore, in partnership with WeRide by early 2026. That's cool. In October, we announced our multi-year partnership with May Mobility to integrate their autonomous driving technology, including fleet management, vehicle matching, and routing services, into our core ecosystem. The partnership will combine May Mobility's operational best practices and Grab's local expertise to facilitate the safe and reliable implementation of AVs in Southeast Asia, tailored to the unique needs of local infrastructure. Okay, cool. What do you guys think about this being a couple grab heads in chat? I honestly, once again, like reading through this, aside from the loans growing 65%, which, to be honest, without knowing their underwriting capabilities or how good this is, like anyone can grow their loans. I don't get this business. I don't get why everyone's so excited. What is so cool about growing a business 17% year over year, unless you're valued like some sort of, value investment? Like, I'd rather buy Shift 4 or something. I don't understand what's so exciting about this business. Why take the risk of this company? Well, I mean, yeah, the profitability side growing 50 to 60% is quite exciting, but I just don't care. I'd rather just hold Nubank. You know? Probably just because it's a big name in Southeast Asia. Yeah, but then hold C Limited or something. Like, I don't know. Like, there's Asian names that are actually growing fast. Tanner, Grab is a safe place for me as an Asian. I can sleep safely at night. So maybe that's the thing. I don't understand that. Like, if there's like I don't know, some sort of cultural pride or something. I just try to make money. Like, I'm a Canadian. I'm not out just trying to buy Canadian names. I don't even hold, Shopify because it's Canadian. I hold it because it's one of the best growth companies in the world. It definitely is well, I can't say this to be certain, but the business type, like, I can understand fintech and delivery and taxi services and these sort of things is something that you can sleep well holding. But also, like, I don't know, hold Nubank or Shift 4 or Uber. Like, why not hold Uber? Anyway. Ladies and gentlemen, thank you all so much for watching. I got to get ready for my 7 o'clock stream. So, really do appreciate your time. Subscribe if you want. Bye for now.